Hello everyone, I'm Marshall Lamb, Research Leader at the National Peanut Research Laboratory in Dawson, Georgia. And today we'll be talking about the 2021 peanut markets. The 2021 peanut markets are a lot different than what we've seen in the past years. And they're different from a number of different reasons. And we'll go through the current situation and discuss why the markets are different and how to consider positioning yourselves as we go into 2021. As you can see, this is a look at harvested acres in the United States, with a peak in 2012 followed by a down cycle, back up to another peak at roughly 1.8 million acres in 2017, and again followed by a down cycle of 2 years. And in 2020, we ended up harvesting roughly 1.61 million acres in the United States. But it's interesting, I want to show you a slide next. Just focus on these two peaks in 2012 and 2017, because those also corresponded to our highest yields that we've ever had in the United States, at 4,217 pounds on a harvested acre basis in 2012, followed by 4,176 pounds in 2017. But it's interesting, after these two peaks, how yields declined over the next 4 years. And then the same stair-step pattern after the 2017 crop. Don't know if that has to do with rotation or weather, but it's just an interesting repeat of each one of the peaks in the years after that. But in 2020, on a harvested acre basis, we ended up harvesting 3,796 pounds to the acre, much lower than what was anticipated, and it was due to a number of reasons. The storms in the southeast that affected West Alabama, Louisiana, and western Florida, but also the drought that hit out west and affected our friends in Texas, Oklahoma, and New Mexico. On a farmer stock production note, you can see again these two peaks that we had. But to make it current, you can see that right now, or for 2020, we delivered right at a 3 million ton crop, 3.1 million ton crop. And early estimates for the 20 crop, I have 21 here, but this is the 20 crop we're talking about. The early estimates were that we would deliver a 3.3 million ton crop. And we're significantly lower than that by the tune of about 300,000 tons. And that is significant when we're looking at supply and demand. So that's the supply side on a production that is less than was anticipated and at around 3 million tons for the U.S. On the demand side, extremely good news. You can see that in the United States, per capita consumption in pounds has steadily been going up from 6.7 in 2012 all the way up to a new record in 2020 of 7.6 pounds per person. And this is just phenomenal growth that we're seeing. And if you add oil stock to this number, it's actually even a little bit higher. So just excellent work by Alabama peanut producers and all of the industry groups on getting the word out on peanut consumption, because it is resonating. And it's interesting that we're able to grow this when peanuts are already present in over 90% of the households, which means, and so we're not going to get more penetration into the households. What this means is our consumers are eating more peanuts, and it's a great story. When you look at exports, again, it is a very good study that is helping the demand for U.S. peanuts. You can see since 2011, going up to 2019, we've seen a steady increase in peanut exports. On a farmer stock ton basis, it equates to roughly 630,000 tons in 2015, up to 2019, where we're at 753,000 tons. And when we look at current numbers, from August of 19 through November of 2020, total exports are up 3.7%. Now, it's a different shift on where we're exporting, more to China and less to Europe, but the bottom line is that exports were up just under 4%. So when we look at these numbers and look at the production side, which was at 3 million tons roughly, down 300,000 tons from where we thought it would be. And then couple that with the demand side, with we're eating more peanuts, which means we're selling more peanuts, and then in the domestic side, and our exports were strong. That raises the demand side. And this is a picture of where these come together looking at the carry forward, and I'm basing mine at the end of July. So you can see we've had some very high carry forward numbers at 1.25 million tons, almost 1.3. But notice how since 2017, our carry forward has been steadily ratcheting down because we had lower production and lower acreage in these 2 years. In 2020, you can see that the carry forward number estimate is around 860,000 tons. That, coupled with the current prices for corn, soybeans, and cotton, is a very favorable carry forward from a farmer perspective. Another thing that's working for us is the crop prices for cotton, corn, and even soybeans that are competing for acreage with peanuts. And this is a picture of cotton prices. You see the peak that we had way back in 2011 at 90 cents a pound. And then we had some very depressed prices. In December of 20, we were at roughly 63 pounds was the offer. But now, going into 21 December, we're looking at 79-cent cotton on the board. So a tremendous price increase in cotton, which is going to compete for peanut acreage in the market. Also, a year ago, last year when we were having the meetings, September corn was at about $3.78 per bushel, but we did have a strong basis, so the actual price to the grower was a little more. But in September 21, right now, corn is about $4.78 a bushel, and we still have a strong basis in a lot of areas, which is helping producers. So corn is also competing. And November 21 beans can be contracted at roughly $11.80 per bushel. So all three of these crops are up in price and are there to compete for acreage with peanuts. Now, quick look at the PLC payments. We've seen this slide in the past. You can see the years where we have the market year average price per ton, and then that translates into the PLC over the years. But for 2020, on December 10th of 2020, I looked at what the projection was, and the market year average price was estimated at $420, which translated into $115 per ton PLC projected payment. So for the 21 crop, the take-home message is here. The carryout position has tightened significantly. We see the numbers, and it is at a very tight spot that we haven't been in several years. Couple that, or that is a function of the domestic and export markets have doing very well this year. It's a lot of good promotion, and hopefully this will continue, and I have a feeling that it will. Competing prices, corn, cotton, and soybeans, the prices are in a very good position, and they are competing for peanut acreage. But we do have to remember, we need to replenish the supply of quality peanuts to maintain growth in our domestic and export markets. Having that supply allows us to continue demand, and that's what we need, because continually increasing demand and consumption, both U.S. and internationally, is critical to our future. But the advice is, just evaluate which crops will provide you the highest net returns this year, and get a good balanced portfolio of those crops as you go into 21. But also keep in mind that rotations matter. We've done a lot of studies on rotations, and the shorter the peanut rotations, the more disease pressure and the lower the yield. But higher prices for corn and cotton do allow us the opportunity to improve our rotations, both from an agronomic standpoint and an economic standpoint. But we also have to balance that with being able to deliver a good supply of quality peanuts to continue our growth.